Hi everyone, hope you're all doing well, and today I'm going to talk about the 7 stocks I bought this week and the 1 stock I sold this week. So I wasn't actually planning to buy this many stocks. The only reason why I bought so many is because one of my companies got bought out, and because of that buyout happening, it basically meant my cash pile went back up from like 30% to 35%. And even though I want a good cash pile because I do think the markets are a little bit too high for what, they're a bit too high up from what they should be really. I think they should be a little bit lower, and I think we are probably due a little bit more of a pullback. So I want to keep some cash there just to protect me. Then if the opportunities come to go and do some Christmas shopping, then I can go do that. But yeah, I don't want to have too much cash. So it meant because of this company getting bought out, my cash pile went up to about 35%, bit too much, because if the market just carries on going up, I'm not really playing a big part in that and still buying companies. So it's kind of like balancing both situations out. So because this company got bought out, my cash pile went up. It meant that I bought a few more companies than what I would have normally done, just because I didn't want that cash sitting on the side. But I'll go through each company. I'll try to spend a minute or two on these companies and say why I bought more or sold them. But if you could smash the like button. If you do want to know when I'm buying and selling these companies, join my Patreon. So on Patreon, I post exactly when I bought and sold these companies. And if you do want to start buying some shares, there's a link to a free trade account. You join through there, you also get a free share as well. We'll get stuck into these companies. Like I say, I'm only going to spend about a minute, 2 minutes on it. I have probably got a full video on most of these companies, so if you do want a bit more detail on it, go check them videos out. It'll kind of break down the company and like revenue, profit, the game plan of why the company will go up in share price. But this is just kind of a quick update on how my portfolio is going. So we'll take a look. So we start off with the company that I sold this week, which was Glue Mobile. So many of you guys know this one because I did make a video on it. I think it was Tuesday I made the video on it saying that Glue Mobile was going to get bought out by EA, and yeah, I got some good profit off that one. Bit sad because I wanted to build it into a big position, and I do feel like EA did underpay for Glue a little bit. I do think they should have paid a little bit more than what they did, but that's well done to EA. They've done really well to get Glue at a cheap price, and yeah, made a nice little bit of profit for only holding the stock for like a month. And because of this stock being sold is the exact reasons why I went and bought a few more of these companies. But yeah, it was a nice little gain. A little bit sad because I wanted to build it into a big position, and I do believe Glue would have been probably at over 100% return this year, which is a little bit disappointing. But at the same time, if it's easy money in a month, I'm not going to complain too much. So yeah, I sold my complete position in Glue. So yeah, and that was, like I said, it's a couple of reasons why I bought some of these companies. So the first two is Planet 13 and eHang. So I started a new position in these last week on the Friday, and going into the Monday of this week, I decided to up my position in Planet 13 and eHang, both by 10%. The stock had been on a good run, but I did want to buy a couple more shares. I still want to buy even more than what I have done. But yeah, on Monday this week, I did up my positions in Planet 13 and eHang by 10%, just to get a bit more coverage in there. Now with Planet 13, this is only up 20%, and I'm praying that this has a dip. It's the one probably out of these two that could dip the most, because like Planet 13 on an average day is like moving 5, 6, anywhere up to 10% on a day. So yeah, to be up only 20% means that if we have two kind of bad days, maybe the stock moves down. It's a small market cap, it will move quite a bit, and obviously it's over the counter as well. So yeah, Planet 13, I'm up 20%. Bought a bit more on Monday, but I am hoping for a little bit of a dip, which can happen because of how much it moves. From where I am at in Planet 13, it's probably a stock that I want to probably three times my position that I currently have, maybe even 4 times. So that kind of shows you how much I still want to buy of that company. But yeah, it's going well, but like I said, I'd rather it not go well. I'd rather the stock go down so I can average in a bit more and get a better average. So that's where I'm at with Planet 13. eHang, once again, like Planet 13, bought 10% stake increase in my position. I'm currently up about 40 or 50% on this one right now. It's kind of crazy because eventually I wasn't going to buy eHang, but I was at the point where I was like, I'm talking about a company that's valued at 4 billion, but this company could easily be a 40 billion company and even a 100 billion company. So I thought, let me just buy it, because it was on a good run. I thought, let me just buy some shares. If it carries on going up, fair enough, I've got a little bit of a position there, it will do really well. Ideally, if eHang can have a bit of a drop, once again, it's a bit like Planet 13, this stock can move 5 to 10% easily in a day. It could give me an opportunity where I can buy a few more shares. I'd love to increase this position, probably by 3 or 4x. But yeah, that's where I'm at with VHang. Looking at how much it's already gone up, I don't know if I will ever have a pull. I think my average is like $80. I don't know if it'll have a pullback that far, but if it does, I would love to increase my position quite a bit from here. But at least I bought some shares and I've got a bit of a play in this space, and like I say, I can leave that to run now, which I'll be kind of disappointed I didn't build a full position out of, but I am kind of hoping it has a bit of a pullback and I can buy a few more. So we'll have a look at the other stocks. So number 3 and number 4 was Shopify and DraftKings. These are two companies that I started buying about a month ago. It was on my free stocks to buy February 2021 edition. Both of these companies, Shopify has gone up a little bit, and this is probably the last time I'll be able to buy this company unless it comes down. But I just wanted to increase my position slightly from where it's at right now. I increased my position in Shopify by about 5%, and at the moment I'm about 20% up on this company, and from here, unless it has a pullback, unfortunately I wanted to make it one of my biggest positions, but right now I'm probably just going to leave it. It's also worth noting that ARK Invest have been buying this company quite heavy as well last week, so that might have helped a few things. Number 4 was DraftKings. This is a company, once again, I want to make one of my biggest positions. As long as DraftKings can stay around about this valuation, this is where I can average into this company and make it quite a big position. So hopefully it doesn't go up too much. It has got earnings coming up. It is a smaller market cap company, which means it will move quite a bit. Earnings could move it up quite a bit. It could move it down quite a bit. Hopefully it moves it down. Be able to buy this company. I like $60 isn't too bad. $50 is good. $40 is like load the boat and make it my biggest position kind of thing. So we'll see where it goes. It's worth noting that the NFL season's kind of over, so maybe when we won't get that in the current earnings report, but in future earnings report, maybe that's because it's weaker quarters. That's where we might get the dip in that one, and it could make a good buying opportunity. So hopefully the next kind of 6 to 9 months of DraftKings kind of, stagnates a little bit, maybe drops even off earnings, and then I can make it quite a big position. So yeah, it's one that I would like to build into because I think it's a great company, and I think that it has a lot of future growth over the next kind of 5 years, and it will be a very long-term hold in my portfolio. Number 5, number 6 and number 7. Number 5 was InMode. So obviously I'm up 100% on this one. I wasn't really planning to average up because I had the spare cash because of this sale. I wanted to not have so much cash that I wanted to put it in some companies. InMode did its classic thing of reporting. It reported its earnings quite early, showing off, saying, look, hey, we've got really good earnings. Came around to the actual earnings this week, and when it came down to the actual earnings, it did the classic thing of selling off because everyone kind of knew they were going to be really good. The stock kind of dropped I think it was something like 5, maybe even more than that percent on the day. And I wasn't, I'm fully built on my InMode position, but because I had some spare cash, it was a drop in a great company. I still think InMode's going to be a $100 company. I was like, I'll just buy a little bit more into InMode. So I kind of upped my position by about 10% on that company. And just took a little bit of advantage of the drop off earnings, which were amazing earnings as well. Number 6 was Callaway Golf. Callaway Golf reported earnings this week. The earnings were actually really strong. The revenue growth was absolutely huge. The EPS was a bit of a miss, and that's what caused the stock to go down. Even though as long as the day went on, the earnings actually recovered and the share price recovered from its actual drop. It was down 13%. I don't know exactly how much it closed out, but it was not too bad where it closed out in the end. I put a market order for the open. I got a decent little up in that position, and I upped my position in Callaway Golf after the earnings. Like I said, it was the EPS was a miss, but the EPS was only bad because of how well the revenue did, and they had a few extra costs because of shipping and stuff like that, which was absolutely fine. The only thing that I'm going to say as well with Callaway Golf is that I'm kind of looking at the golf business and how it's doing, but that's only just a little bit of the company. For me, buying Callaway Golf is all focused on Topgolf, which we won't get the actual numbers for that one until probably the back end of the year. So I'm not, even though I'm looking at the golf numbers, I'm buying this company and not really bothered about that. I'm waiting for the company to acquire Topgolf, a few months down the line. So that's kind of a long play waiting for that one to come through. And number 7. Skills had a bit of a drop. I think it was a near 10% drop on a day, and I do think Skills has gone up way too quick, and it's probably due a bit of a pullback. But nevertheless, I kind of had a bit of spare cash. Looked at the company, it dropped 10%. I think I'm up about 117% on this company or something right now. And just because I had some spare cash, I saw the drop in skills. I was like, I really like skills. I've just lost my mobile gaming play. So skills is kind of, I guess, the closest company to that. So I was like, I'll just up my position a little bit. I upped it like 10%. But yeah, I think I really like skills. And if I didn't have an amazing average and I didn't have this company that sold this week, I probably wouldn't have done that. Because I lost my other mobile play, had a lot of cash. This company had a dip. I just thought, let's just put some more cash in here, because when I think about skills like 3, 4, 5 years down the line, like it could be a really big company. So I don't really mind averaging too much, but like I say, it wouldn't have been a move I would have done if this buyout didn't happen. I wouldn't have bought it, but I just wanted to up my stake in there, and like I say, kind of cover that losing that glue position, I guess. Really trying to find another mobile gaming company, but I can't find one too much at a decent value. So I want to probably, mobile gaming industry is just an industry that's growing so big that I want to have another play in here. So yeah, I can't at the moment. I definitely can't sell this one. I won't anyway, because I think it's got so much potential over the next like 3, 4, 5 years. But now that I've lost my other mobile gaming play in such a big gaming area, I'm definitely holding this one now. But yeah, I hope you enjoyed it. Like I said, there's some companies that probably have gone up. You probably won't see these companies again unless they drop. And like I said, some of these companies was kind of forced because of this one selling. I don't have. It looks like my buying might slow down a little bit next week. And like I said, there's only some companies here really that got bought because of the spare cash. But yeah, I hope you enjoyed me just showing you, my actual sells and my buys this week. So yeah, hopefully it was some useful information for you guys that do track what I'm doing in the stock market. So yeah, if you could smash the like button if you are new, subscribe, that'd be absolutely amazing. And I'll see you next video.